In finance, there are two main players: retail investors like us, who buy and sell assets on a much smaller scale, often from the comfort of our homes or on our phones. And then there are institutional investors, hedge funds, corporate treasuries, and asset managers who control billions, sometimes even trillions, of dollars, and make decisions that can move entire markets. For years, these institutions stayed away from crypto, viewing it as too risky or unregulated. But now, their entry is reshaping the market in profound ways, bringing new credibility and attention. Instead of using regular crypto exchanges like most individuals, they often buy Bitcoin through spot Bitcoin ETFs, regulated investment funds that let them gain exposure to Bitcoin's price movements without having to handle or store the coins directly. Some institutions go even further, purchasing Bitcoin outright and storing it with specialized custodians. This signals a long-term commitment and a belief in Bitcoin's future as a valuable asset. When institutions allocate even a small percentage of their portfolios to Bitcoin, it can mean hundreds of millions, or even billions, flowing into the market. Far more than retail investors could ever move on their own. This massive scale changes the balance of supply and demand, driving prices higher and adding a new layer of legitimacy to the entire crypto space. Their participation also attracts more conservative investors, such as pension funds and endowments, fundamentally shifting the market landscape and making Bitcoin more mainstream. For everyday investors, understanding how and why institutions buy Bitcoin is key to grasping the evolving dynamics and future potential of the market. The institutional wave is a true game changer, transforming the landscape for everyone involved in the world of Bitcoin. 2025 marks a turning point for Bitcoin and the broader crypto market. Institutions have already bought more Bitcoin this year than ever before, outpacing the entire previous year's accumulation. In fact, institutional purchases in 2025 have already surpassed those in all of 2024, setting a new benchmark for large-scale adoption. The approval and rapid success of spot Bitcoin ETFs have dramatically accelerated large-scale buying, making it easier for big players to gain exposure. Regulatory clarity, especially in the US, has made institutions more comfortable than ever before, removing previous barriers and uncertainty. With ongoing economic uncertainty and concerns about inflation, Bitcoin's fixed supply and independence from traditional financial systems make it increasingly attractive as a hedge against volatility. This isn't the first time we've seen institutional interest. Back in 2021, institutional buying fueled a massive rally and brought Bitcoin into the mainstream spotlight. But 2025's surge is even bigger, with on-chain data showing record transaction volumes and unprecedented activity across the network. The number of active addresses continues to grow, reflecting a broader and more engaged user base than ever before. Meanwhile, Bitcoin held on exchanges is dropping sharply, signaling that big players are moving coins into long-term storage and reducing available supply. These trends point to a potential supply shock if demand continues to rise, which could drive prices even higher in the coming months. The scale and conviction of institutional buying in 2025 are truly unprecedented, signaling a new era for Bitcoin adoption. All these factors combined make 2025 a uniquely bullish year for the entire market, setting the stage for what could be Bitcoin's most significant growth phase yet. How can you track what institutions are doing? Watch net inflows into spot Bitcoin ETFs. Steady inflows mean strong institutional demand. Monitor the Bitcoin Fear and Greed Index. Sustained greed often signals a healthy uptrend. Key price levels matter. $60,000 is strong support. $70,000 is major resistance. A breakout above $70,000 could mean new highs. Check the CME Bitcoin futures basis. A premium shows bullish institutional sentiment. These signals together reveal the market's underlying strength. Staying alert to these indicators helps you ride the institutional wave. You don't need to be a financial expert or a Wall Street insider to follow institutional moves in the crypto market. With the right tools and a bit of curiosity, anyone can start tracking what the big players are doing. Use sites like Farside Investors and SoSoValue to access daily ETF flow charts, which show where institutional money is moving in and out of the market. Platforms like Glassnode and CryptoQuant let you track on-chain data, such as exchange reserves, whale wallet activity, and even the movement of coins between wallets, giving you a deeper look at market sentiment. Whale Alert posts real-time updates on large Bitcoin transfers, which can hint at accumulation or selling by major players, and sometimes even signal upcoming market moves. When you see ETF inflows, dropping exchange balances, and big transfers to unknown wallets, it's a strong sign of institutional accumulation and growing confidence in the market. Combining these tools gives you a much clearer picture of how big money is shaping the market, helping you spot trends before they become obvious. Anyone can use these resources to stay informed, anticipate market shifts, and make smarter, more confident investment decisions. Despite bullish trends, risks remain. Regulatory changes or new restrictions could quickly reverse institutional interest. Economic shocks or market downturns may force institutions to sell volatile assets like Bitcoin. Watch for consistent ETF inflows. If they slow or turn negative, demand may be fading. Monitor key price levels. Losing $60,000 support or repeated rejection at $70,000 could signal weakness. Institutions validate Bitcoin's status, but also tie it closer to traditional finance. Stay informed, use available tools, and keep a long-term perspective. Understanding institutional behavior is essential for navigating Bitcoin's future.